Hey, everybody. Welcome to another episode of the Keeping It Real Estate Show. I'm Dan Breezy. Mike Roeder and I are here today with a special episode. We're going to talk to you guys about how we select a deal to passively invest in and what we're looking for and why. So, Mike, I'm glad we're here together doing this.
Same here. Thanks again for everybody for tuning in. We appreciate it. And, let's get started with, step number one, which is to get to know, like, and trust the general partners that you're working with. Whether you're investing in a Fortune 500 company or a real estate investment, it's really critical to find someone that's trustworthy and an experienced leadership team. And you want to make sure that you dive deep and choose the right team to invest with.
Yeah, I think that that's something that was a huge lesson for me personally. And this is the most important piece, I'm going to say, of selecting a passive deal is making dang sure like, and trust that general partner, because that general partner is going to dictate the direction of how that asset does. In the past, I've made some pretty poor investment decisions, and I've invested, and this is not a multifamily deal, but money with a company that was a startup company, and I did not know the general partner, the gentleman directing the asset of the company, and it ended up coming back to bite me. And it's not a lesson I'll ever learn again. So as I have that pain settle in, I hope you can, learn from us as we're talking to you guys that this is so critical. Now, when I'm looking at deals, there's so many deals to choose from. How well do I know this sponsor, and how well do I know their track record? And this piece right here, I can't hit it enough, is the most important piece.
Yeah, and I would say the track record is the first of kind of four different types of criteria that we look at when we're looking to passively invest with someone. And when you're understanding the general partner's track record, there's a few things that you should look out for. Or request. So first, request their track record directly from them. If they don't give you their track record, that's a red flag. If they don't have a track record, you might need to dive in a little bit deeper and see if someone on their team has a track record, or how well you know them. How much time do they have to allocate to this deal? Request past or current investor referrals as well. So if they've been doing this for a while, they should have quite a few investors that can talk to you and can share their experience with you. And that's extremely important. Again, if they're not willing to send over referrals, I would second guess your decision to invest with that team.
Yeah. And, to add to that, let's say you talk to your general partner, and just so you know, a general partner is the person putting the deal together. That's your GP. And LP is you as a passive investor. When I'm investing passively, I'm on the LP side, where I just put my money in and I wait and watch the deal perform, ideally. As a general partner, you're the one finding the deal, getting the debt, raising the capital, executing the business plan, doing the asset management week after week. Now, if you talk to your general partner and they're a beginner, it doesn't necessarily mean you shouldn't invest with them. Everyone had to start in the beginning. But again, I would make sure you have verified somehow that they are in a position where they have the knowledge or the team members with them to actually move the needle. Because once you're in the deal, now you're in the deal. You get in the deal and you want your money back. That's not how this game is. You got to be able to come into this thing and potentially weather a 3 to 5 year storm. Ideally, that's not happening, but just something to consider before you just dive right in.
Exactly. And when you're looking at their track record, you also want to look at their current asset performance. So any deals that they currently own that they haven't sold, ask them how those are performing as well. Have they missed any distribution? Are they hitting their pro forma projections? That's going to be important too. And, kind of circling back a piece that I just mentioned, talking to previous investors, any successful real estate investor should have a handful of willing limited partners who will take a few minutes to discuss their experience with investing with them. And personally, I would see if you could get a phone number and call them. Have a quick conversation, 5 minutes over the phone. That's going to tell you a lot more than shooting out a quick email and getting a response via email.
Yeah. And another question I like to dig in on is I want to know who their team is. Who are they working with as far as for their CPA, their tax work? Who's going to be doing their cost segregation study? What's their track record with their legal team? How is their depreciation set up? In this world of syndication and multifamily, it's very, very easy to pull wool over investors' eyes. A lot of our investors were so fortunate. They just say, hey, is it a good deal? We say, yes, they come, and it's been great. But until you have more of a track record, that's not going to happen that easily. And as you're looking at these deals, those team members are going to be so critical. Who's the property manager? Have they worked with them before? Who's going to asset manage the deal? Asset management is a weekly job that's very detailed, and there are very specific key performance indicators that you're going to want to make sure that these deal sponsors know how to track. So another piece to just dig in on is the team.
And something that I've seen in the industry as well is you have syndicators that get into the game, they close the deal, they do a great job at that, but then they're tied up with their full-time position where they're working 50, 60, 70 hours a week, and they just don't have the time to stick into asset management. And that's a lot of times when you see properties start to slip, because when you're not closely monitoring the third-party management team and what's going on at the asset, making sure that the CapEx projects are being done properly, that the property has decent Google reviews and so on, the property can start to slip pretty quick. So make sure that that team member or someone on the team is going to be properly asset managing and that they have the time to do it.
And adding to that piece, if you're going to be investing in a deal, make sure that the property manager that they're hiring, if you can, it's their bread and butter. You know, there's so many different property managers out there for so many different types of assets. That property manager is going to have a massive reflection of how the asset does. And if it's a management company that is familiar with the submarket and they've done this before, it's their bread and butter, and you've got a great asset manager with the right business plan in a strong market, you'll probably be just fine and ideally do very, very well. So something to consider with the management team.
Yeah. And with the management team, you can ask that team if they have other assets that are managed by that management team. And if they do, how are they performing? I mean, if they have a few properties that are managed by that property management team and they're kicking butt, you know, there's probably not much you have to worry about. So that'd be a good question to ask as well.
The other piece you can kind of dig on is what kind of training the general partner has been through if they're new. There's a lot of new syndicators in the market these days. And if you can find somebody who has actually gone through a training program, you're likely to have more success and they've learned from the mistakes their mentor might have made. That doesn't guarantee they're a good student, but it should at least give you some confidence. Again, I'm going back to it. How well do I know this general partner? How much confidence do I have in their track record? And you should be able to get a pretty good feel. And if you aren't certain, just wait. That's the other piece that is so huge. Selecting the right passive deal is there will always be another deal coming. There's no need to jump now. And I think I got sucked into that right out of the gate was I got to get my money to work now. That doesn't mean you sit out, but it just means you diligently focus and work on getting to know these deal sponsors. And I can tell you right now, any general partner who's got a business or is raising money, they will take time to get to know you and share the details. And if they don't, red flag, move to the next general partner.
Exactly. And all this information, or the bulk of it, is in our ebook. So if you need more information on it or you want it in writing, feel free to jump onto our website and there's an ebook tab. Our website is granitetowersequitygroup.com. Fill in your information, download the ebook. You know, at any time, reach out to Dan or I. We're open for questions, happy to take a call or an email. Appreciate you tuning in today.
Thanks, everybody.